if a person has taken loan, right, and he is not repaying its debt, not repaying, and what he is doing, he has channelized that fund. For example, uh, if a person has taken loan for a company A, right, then what he's saying, either he has channelized these funds of A to any company B. It can be one case. Another case can be he is not paying the money taken against A. He is not paying the EMI, right? And third position can be that he might have used this money for other purposes than uh, for those purposes for which the loan was meant for, right? So if you will see, a willful default will be deemed to have if any of the following events is noted. The unit has defaulted in meeting its repayment obligation. This case, that means he is not in a position to pay the EMI. He has not utilized the finance for the specific purposes, right? So if you see Vijay Mallya case, he was having n number of businesses like airlines, beverages, right? So what he was doing, he was taking a loan for particular company and either was channelizing these funds for another company, and he defaulted on the payments. The unit has siphoned of the funds borrowed for specific purpose and the funds are not available with the unit in the form of assets. Has disposed of the assets given by him for the purpose of security without the knowledge of the banker lender. Means he has taken loans against company, this for example airlines, and what he did, he utilized these funds for another company, right? That means he didn't invest in this company, rather he utilized these funds for another sister concern. So that is basically for default. This is an cartoon. It's sailing and banks are looking for him. Tax avoidance. So this is, if you see this cartoon, it says all about tax avoidance. He is sadhu, saint, and he is chartered accountant, right? And he is trying to explain the meaning of life. So people are not interested anymore in understanding the meaning of life. Rather, people are interested in tax avoidance advices, right? Because they're approaching the chartered accountant to advise them how to avoid the payment of the taxes. When we were discussing tax evasion, right, it should be clear in mind that tax evasion is illegal. Tax evasion was illegal, and that was basically black money. While in case of this tax avoidance, it is basically legal. You are using the legal method. Why you are using the legal method? Just to minimize the amount of income tax, right? For example, if your income is, for example, more than 20 lakhs, you are coming into the category of 30% slab. Now, if you want to minimize the incidence of the tax, then what you are doing, you are taking the help of CA, right? He is advising you, okay, you can declare this income from agriculture, right? The best example I have already discussed with you, the example of Amitabh Bachchan. Right? What he is doing, he many a times he has declared that his income is from agriculture, right? At many times he has declared that he is having more expenditures on his security personnel. So income tax department can give him the notice. They have given notice to Amitabh Bachchan. It was, that's why I'm telling you, it's nothing like I'm I'm telling you a fact, right? So whatever he replied, like he was saying that I am earning from agriculture, right? It was legal to announce his income from agriculture, because if he is having income from agriculture, then he is not supposed to pay the income tax on agricultural income, first thing, right? If he is announcing that so much of expenditure is taking place on this particular expenses, that means he is not this expenditure will be deducted from his income, right? So he is announcing his income, but he is using the loopholes in the Income Tax Act. And those loopholes are nothing but they are helping him to avoid, to minimize the amount of income tax. So this is generally accomplished by am I audible? Okay. Can you please tell me wherever we actually there is today there is disturbance. Please let me know where were we. Sorry for the disturbance today. Actually, anybody where I was talking about what I was talking about? Agriculture. Okay, done. So uh, whatever steps Amitabh Bachchan has taken, or for example, in the, I have already taken the example of P. Chidambaram, that he announced that he is earning crores of rupees only from the kitchen garden. All these examples, and if you see the these big companies, what they are doing, they are having chartered accountants, and they are only advising them how to avoid the taxes, right? So as per law, it is not legal. Basically, it is illegal. This is as per law, it is not illegal. That means it is legal. It is legal. Governments across the world are planning to adopt legal provisions to check this. GOI has institutionalized GAR. I have already discussed. At global level, countries are adopting base erosion profit sharing. That we'll discuss in the next slides. So withholding tax, I also explained with you, discussed with you that withholding tax means, for example, if you are an employee with a company X and X is your employer, right? Then if he is giving you certain salary, for example, they are paying you 10 lakhs rupees a year, then this employer will withhold, right, the tax paid, which has to be paid by you. It will be deducted on the source by employer. Second method can be like I discussed in case of Vodafone and Hutch, or if you are seller, right? And if this is X and this is Y, Y is buyer, and the property deal is for 1 crore. Now what will happen? This buyer will deduct 10% of the amount from this 1 crore rupees, right? And this 1 crore 10%, that is 10 lakh rupees, will be withholding tax, and buyer will be holding this 10% of the tax 10 lakh rupees, and this 10 lakh rupees will be deposited by this buyer with the government of India. So this is withholding. That means you have to withhold the tax. In case of employer-employer relationship, it is the employer who has to withhold. And in case of seller and buyer relationship, it is the buyer who has to withhold the case. Now tell me one thing, in case of Hutch and Vodafone, who is liable to withhold the tax? Who was liable to withhold the tax in case of Hutch Vodafone deal? Vodafone, very good. P. Krishna, very good. It's the buyer, because Vodafone was the buyer, and that's why buyer is liable to pay the to withhold this tax. Shell company. So in case of Hutch Vodafone, we discussed that Hutch Mauritius, Hutch Cayman Island. What these companies were doing? These companies were doing nothing except they accept the transaction which took place between Vodafone and Hutch, right? And these companies are basically a simple office. There is a simple one-room office, and the objective of that office is only to transact such deals. They are doing nothing except transacting the deals, right? Now, what they are doing, that these companies, as I told you that there's an example, a single office building in the Cayman Island is home 19,000 shell companies. Imagine a single building is having 19,000 such offices. You can imagine that the strength of such companies in such islands. So what these companies are doing, so the basic idea of these companies, they are traditional tax havens. Traditional tax havens. That means these companies are having the offices in these countries just because either they are having legally tax exempt jurisdiction. That means there is no taxation on such transactions, or they are zero tax jurisdiction, right? Zero tax. That means there is no taxation, zero tax, or traditional. That means which are popular since long, like Switzerland, Mauritius. So these are different type of countries which are providing these facilities or these flexibilities. That's why companies are attracted to these destinations. So a shell company is a legal entity created in the tax haven. Such companies typically exist only on paper, right? They are paper companies. That's why, and these companies are referred to as shell company, offshore company, and there is another name to these companies, post box companies, because they are doing nothing except acting as a post box to these companies, nothing else. So if you see this cartoon, if the government keeps attacking rich tax dodgers, I have a good mind to move abroad and not pay my taxes somewhere else. This is cartoon. Treaty shopping. So if treaty shopping, actually what we saw in Hutch Vodafone case, we saw that Hutch was having office in Hutch's Netherlands company. For example, Hutch was having office in Hutch Mauritius, and it was having its operation in this India. Right? This was the case. So if you see, now this is jurisdiction A, this is Netherlands, Hutch Netherlands, Hutch India, and this is C is Hutch Cayman Island or Mauritius. Now see, what is happening, this is the owner of the country, source of the income. That means Hutch was belonging to Netherlands, right? And this company was having operations in jurisdiction B, that is in India. Right? And there is 25, for example, there is 25% withholding tax in case of India. And this is having a treaty with country like Mauritius and Cayman Island that we will be imposing 0% of taxation on such deals, right? That is jurisdiction C. Jurisdiction A is having an agreement with C, that is Hutch Mauritius, that there will be 0% imposition of taxes on such transactions. Now, what this company is doing, it is shopping into this country B, that is India, via country C. This C is acting as a conduit. This is nothing but channelization link. This is just channel conduit. It is acting as a conduit. That means the option for A was that they can directly invest in B, but they did not directly talk to B because there's an agreement between A and B that if such transaction is taking place, then B can impose 25% of the withholding tax. While in the case of C, A and C, there is a agreement between A and C that such transaction will only have an incidence of 0% of taxation. That's why this country A or the company from country A preferred to have a office in jurisdiction C, so that this C is having relationship with I, that is India, because they are having only imposition of 5%. Right. So this is basically you are just not talking to the direct country, rather you are channelizing the funds from one via another country. This is treaty shopping. This is why this is treaty shopping, because you are manipulating the deals of the treaty. If these treaties were not there, might be a possibility if everywhere there was 25% of the imposition of taxes, then there was no need to go from jurisdiction B via jurisdiction C. Tax havens, again, this is a term for those countries which are having low or no corporate taxes, and it enables outsider to set up businesses there. Information is not easily provided by these countries. They are basically clandestine rules, opaque. They are having opaque rules, and these countries are not providing details to any other countries. And this is very popular in case of Switzerland. Worldwide, countries are pressurizing the countries like Switzerland, but despite that, they are still having the secrecy jurisdiction. Examples are Panama, Netherlands, Mauritius, Switzerland, and the companies which are executing the businesses in such countries are basically shell companies, offshore companies, or post box companies. Tax havens make significant income from fees paid by people and companies who create a new shell companies. So somebody was, I think in the previous class, somebody was asking that how these countries are managing their economies. So they are basically paying the fees, right, for the registration of the companies, and they are also managing the economies by providing rent, right, and providing employment to people. Round tripping is basically, I think in the case that I told you that when we were discussing the concept of P note, so I told you that it's a possibility that an Indian is sending his or her money first to any tax haven, and from that tax haven, this money is again channelized into India. That means it was basically the Indian money only. But this money, which is coming from tax haven, appears as if this money is coming from this tax haven. But this money is basically the Indian company. It is basically routed, this money is only routed via tax haven. So round tripping of FDI refers to the capital belonging to a country which leaves the country and then is reinvested in the form of FDI. Correct. So Indian companies hold assets abroad, reroute money stash abroad, Swiss institution, fictitious company, Indian company, and this is taking place through that fictitious company is nothing but a shell company. So all these terms are basically related to the tax havens, shell companies, tax avoidance, right? And first try to understand that all these terms are related to the black money part. Secondly, try to understand the basic differences between all these things, because UPSC usually asks these questions: what is round tripping, what is TT shopping, with which reference it is related to. Such questions are usually asked in the UPSC pre-exam. Right. Then comes another concept, DTAA, double taxation avoidance agreement. Now the idea of this agreement is that, for example, if your brother is in US, and so if he's for an assignment of 5 years, but he is a resident of India, so when he is earning in US for 5 years, then what will be his tax liability? Right? Whether there can be 3 situations. First, his income will only be taxed as per the US laws for the 5 years. Second can be his income will only be attracting the Indian taxation rules. And third, his income for the 5 years will attract US as well as Indian taxation laws. There are 3 options. So previously what was happening, that this individual who was in US, he was attracting this thing. That means US was also asking some form of income tax, and Indian income tax department was asking for the same. Then what happened, that these people who were abroad, they were facing the problem in the form that they have to give a lot of money in the form of taxes. This agreement, double taxation avoidance agreement, allows that there will be an agreement between US and India. And this agreement will decide that what will be the nature of taxation on this person. Right? Preferably, it is basically the country where you are working, those income tax rules are imposed upon you. Right? So if you are in US, you will be imposed US income taxation rules. Right? So this is double taxation avoidance agreement. That means this case is avoided by an agreement between US and India. So it helps the people to pay more taxes. Base erosion and profit sharing, BEPS. I think there was a question on this term 2 or 3 years back, or it was in the 2018 something. So basically the idea, when we were discussing Google tax, right? When we were discussing these shell companies, when we were discussing this Vodafone Hutch. So whatever we are discussing, the things to be considered in all such deals is that neither the country of origin, for example, neither Netherlands nor the country of operation, that is India, neither of these 2 countries are taking any benefit from such transactions. Right? Neither India got any tax, neither Netherlands got any tax. See, businessmen is not, they don't know any nationalism. They are having only single secular religion, and that is basically return on the investment, right? They don't know anything nationalism and all those things. So what happens, that this is a matter of concern not only for India, because in the Vodafone Hutch case, you realize that it is India which is again and again interrupting or intervening in this deal just for the taxation, to get the tax incidents, right? But you are not talking about Netherlands, right, or the developed countries. Basically, these countries are also facing the problem because they're also losing the taxes. So after this 2008 recession, G20 countries were very much concerned about this tax losses, right? Because previously what was happening, only they were thinking that only developing countries are at the losing end, but later on they realized that we are also at the losing end. Then they realize that we have to come forward and we have to strategize, right, or devise new techniques so that such uh, base in erosion can be avoided or profit can be shared with us also. So it refers to tax planning strategies that exploits gaps and mismatches in tax rules to artificially shift profits to low or no tax locations where there is little or no economic activity, resulting in little or no overall corporate tax being paid. It is of major significance for developing countries due to their heavy reliance on corporate income tax, particularly from MNCs. It's a global problem which requires global solutions. It's of major significance for developing countries due to their heavy reliance on this thing, right? So this is all about your BEPS. So this is nothing but many times, actually, don't confuse in BEPS. At many places you will find that these are the uh, strategies used by the companies to avoid the payment of the taxes or to minimize their taxes. In many places, you will find that these are the strategies adopted by countries to check that evasion, right? So you'll find different type of, but it is related to avoidance of the to check MNCs from avoiding the payment of the taxes, right? So across the world, the countries are devising new techniques to check this thing, and like new things like Google Tax is also such idea, right? So this is all about black money. Any query? Recently, levy minimum guarantee tax at all jurisdiction. Yes, OECD countries are also trying their best, and G20 countries are also trying their best, right, to check this. Then what about the tax on employees working for MNC in other country? What we were discussing was this DTAA is basically about this thing only, right? That such employees who are working for the MNCs. See, if a person is Indian and he is working for an MNC in India, definitely he will be taxed as per the Indian laws. But the issue comes when you are working in US, when you are relocated to US and you are working in the US, right? You have relocated geographically. That is an issue. So DTAA is applied for such cases. Any other question? So next we'll be taking savings. I think we haven't discussed savings now. Anyone? Have we discussed the savings? No, right? Savings basically one thing you have to keep in mind that please go through the chapter on savings in economic survey. If there is no chapter, then they are talking about savings in economic survey, because questions, there are certain changes in the savings pattern every year, and there are certain specific things related to the savings. And many a times it has been observed that UPSC is asking very specific questions on saving, and those questions are basically directly coming from the economic survey. Right? So what was